Welcome back to Closing Bell. PMI reached a 6-year high at 56.5 in August, surpassing a 51.8 consensus. This as new car sales decreased 0.3% to 56,000 in the same month. Well, I'm joined by Nedbank economist Isaac Motejo for more on this. Thank you so much for joining us, Isaac. So let's talk about the PMI figures that came out today, sharply higher than what it was. Break that down for us. Why is it that we've seen such a sharp increase in manufacturing data?
Well, firstly, I must say that it was a very encouraging number. I mean, over the past 4 or 5 months, we've seen, the PMI picking up, which simply means that conditions for our manufacturers are improving. When that number is above 50, it means that conditions are getting better. Below 50, they are getting worse. And what we saw is a contribution from all the sub-indices. What really encouraged me was the increase in the employment sub-index. We saw it ticking up for the first time in about 18 months or so. That tells me that there could be some improved job prospects in the manufacturing sector. I mean, the weaker end maybe is contributing to that, but I mean, looking at the situation at the moment, particularly looking at the labor stability in our country, it's not very encouraging.
Yeah. Now, is this a sustained trend that we can keep on? Because you did mention labor stability. We'd like to talk on business confidence, but can we sustain this trend that we're seeing now in the PMIs?
Well, our manufacturing sector depends somewhat on exports, and when you look at the PMI numbers that came out today, particularly from Europe, very encouraging. I mean, you look at the Eurozone, of the 8 countries that are surveyed in the Eurozone, only 2 disappointed, France and Greece, and even Greece has picked up to a 40-month high or so. So that trend is sort of encouraging. If we can really get our act together in the manufacturing sector, we could benefit from improving conditions in the Eurozone, which is our major trading partner.
Let's talk about the vehicle sales that came out down slightly. What does that tell us about the state of South Africa's economy now?
Well, the total number is about 56,000. Even when you look at passenger vehicle sales, you're looking at about 35,000. The question is, the state of the economy at the moment. Can it sustain that sort of number? My feeling is that, that's a reasonable number, in the current environment. The previous month, the total sales was about 58,000. My feeling was that, this economy cannot sustain such a high number. So 56,000 is sort of a reasonable number. Even next month, we could see a bit of a decline, which wouldn't be surprising to me.
Now, a big week ahead, because we don't have much time, I'd really like to touch on this. We've got the all-important job numbers coming out from the US. What will this mean for us? Because now we want to know, will they or will they not in terms of quantitative easing? We've seen in the past couple of weeks about emerging currencies, our capital outflows. What are your expectations?
Okay, the big talk at the moment is about the September 17 and 18 meeting of the Fed. The question is the Fed going to start reducing its purchases at that meeting? And the employment number coming out on Friday will be the key piece of data that they're going to look at, and we're going to watch that very slowly, very sharp, very carefully, and if we see a very strong number on Friday, definitely the chances of tapering beginning on September 18 will be increased, and that could rattle markets a bit, particularly emerging market assets.
Thank you so much, Isaac, for your insight. All eyes will definitely be on the non-farm payroll numbers. That was Isaac from Nedbank, who's the economist there, Isaac Motejo.